Welcome to our CEO interview. Today we're joined by the Head of Global Markets and Corporate Finance for MHC Digital Group, Mr. Edward Carroll. Welcome, Edward.
Thanks for having me.
Now, you've obviously spoken earlier today. You've been on the panel session. I'm a big fan of what MHC does. Would you give a bit of a background as to the company, the history, the sort of, the founder behind it, and sort of your plans?
Sure. So our background is institutional funds management, but I'll go back a bit further than that. The founder of our firm's a guy called Mark Carnegie. He started an investment bank in Australia many years ago called Carnegie Wiley, sold that to Lazard, became the head of Lazard Australia. Then he started an alternative asset management platform called MH Carnegie & Co., built that up to be $1 billion funds platform. And then about 3 years ago, he tapped me on the shoulder, having just joined his firm from 10 years at Macquarie, and asked to build an investment bank for digital assets. He'd been looking at the sector for a number of years and was very confident that there was a future in the technology of blockchain, and I think the provision of sort of institutional grade services and products and services to it. And so we then went on a mission to kind of build the platform, which is MHC Digital Group, to focus on delivering those products and services to institutional clients.
So let's break that down. What would you define as an institutional client to start with?
Good question. I think that really when I say institutional, I mean wholesale. So in Australia, that would be anything from a sophisticated investor all the way up to a superannuation fund or a fund manager. I think that what we've sort of seen is that we had to kind of structure, by DNA, we are sort of exclusively wholesale based. Our traditional funds platform caters to a large number of family offices and superannuation fund capital, where we act as a fiduciary. So our expertise really is in that kind of more institutional end of the spectrum. But what we found when we came into this sector is that, particularly 3 years ago, there really wasn't the appetite from institutions yet. So what we decided to do was build a platform to cater to that. And so that's kind of where we got started. Is we built a funds platform to begin with. We've got a couple of liquid strategies there with a venture platform as well. And now we've kind of built the engine room of the business, which is the markets platform, which kind of delivers.
So I want to help simplify this for people just in general. So why would an institution need you to get access to crypto, and why do they need you as part of their, let's call it their sort of process, or as part of their journey in sort of moving into crypto?
Well, a couple of reasons. Firstly, the market has been fairly underdeveloped in terms of what they can access. So, for example, if you want to buy a Bitcoin at the moment, there really wasn't an institutional grade product through which to do that until the ETFs came along. Now, that is a viable product. That is a well-understood product.
And the reason for, just to give context, the reason for that is because typically if you want to buy a large amount of Bitcoin or a large amount of Ethereum, it's often made quite difficult trying to go through sort of crypto exchanges or et cetera.
Yeah, exactly. So traditional crypto has been predominantly a retail market, unless you had funds who were acting as a fiduciary investing in it. Now, but what we found was that there was a need for traditional investment banking service, so effectively brokerage. So if you want to buy crypto in Australia and you're an institution, there are limitations on who you can deal with. Now, we are an Australian AFSL licensed financial services platform. And I think just one core thing I want to focus on as well is that there's increasingly going to be a need, particularly as the regulation evolves, to provide a regulated onshore custody solution to facilitate to make sure that those assets are custodied in Australia.
Agreed.
And we're about to come to market with that product as well to make sure that we really can cater to the needs of institutional clients as they want to allocate to the sector.
What I was really impressed about when I first spoke to you and your team was that I think, if you look at the way crypto is going, you mentioned about the institutional adoption through ETFs and so forth. But then also, obviously in the US, you've got the US government that have got a what would you call it, a white paper out, or a think tank going around about basically having a strategic Bitcoin reserve, which they promised as part of the election. And there's a whole dominoes effect that's likely to take place with that. Like if the US has a sovereign fund which has Bitcoin in it, then there's likely to be other countries that are likely to do the same. But also at the same time, when I did my research, I was surprised to find out there's 70 listed companies that also have Bitcoin in their treasury or on their balance sheet. Are you starting to notice more and more companies or corporations also speaking to you about sort of looking to get access to crypto for their balance sheet?
Certainly. Yeah, we've really positioned to help facilitate that product as well. I think just to your point about the strategic reserve and the kind of attitude towards Bitcoin specifically, that is increasingly being seen as a store of value. I think
Yes.
the kind of like the green light from both the ETFs into the kind of regulation, the strategic Bitcoin reserve in the US and throughout the world, I think corporations are increasingly the theme and the issue and the concern relating to monetary debasement means that people are looking for alternatives, both as an inflation hedge and necessarily as a necessary kind of like treasury solution to help make sure that their balance sheets are appropriately hedged and structured. And so I think the answer to your question is, are we seeing corporations? The answer to that question is yes. But do we think there'll be significantly more? My answer to that is overwhelmingly yes. So.
And I love what you said. Like, if a company's out there that's sitting with $10 million on their balance sheet and they think, you know what, we want to allocate 5% or 10% of that to Bitcoin, it's not as simple as just reaching out to your local sort of Bitcoin exchange and then going and buying it.
No, I mean that's the problem we're trying to solve.
Yeah.
If you're a company and you want that access, one, you can get access to a really high quality product akin to an investment bank or a brokerage. And two, you get custody there. And then three, and we're about to come to market with this as well, there's a lot you can do with Bitcoin once you've got it on your balance sheet.
Correct.
There's a lot of derivative products you can get to generate a return on that, such that it's not just a capital growth play. It's also a structured yielding play where you can, there are products available that we can provide, which really do allow you to properly manage your balance sheet and your treasury in a way which should really help create value over time for these corporations as well.
And so obviously Bitcoin's known for a sort of wild flux. Obviously it's, I think Michael Saylor said it best. It's like no one's ever lost money holding Bitcoin for longer than 5 years. But in that 5 years, it's a wild journey. Like right now, we're sitting at 30% down of its sort of all-time highs. But ultimately, go back sort of 2 years ago, we were sitting at like 25 to 30,000, right?
Sure.
So it obviously got some. So how do you sort of assist companies with that sort of strategy of once they have it on their balance sheet, some of the sort of let's say fluctuations that may come with it? Is there sort of strategy you provide your clients with as part of that process?
I mean, I think the advice we give overwhelmingly is always dollar cost average.
Yeah.
So we are, I guess you'd call us Bitcoin maxis. We are very bullish about the medium to long-term prospects for it. I think the institutional adoption we've seen has meant that we think there's an enormous demand-supply dynamic mismatch, which favors massively to the top side in terms of price action. What that means in the short term, though, I mean, I can't tell you where Bitcoin's going tomorrow. I have a view on where Bitcoin's going in 5 and 10 years. Much same as Michael Saylor as well. So I mean, he's very, very bullish, but I firmly believe in his underlying thesis, which is that, this thing has a future and it's time to, and you're better off getting on the train than not. And it is a self-perpetuating kind of cycle. The more people that believe it, the more it goes up because you've got a fixed supply and you've got significantly more demand than there is supply. So that should naturally lend itself to upside price action. But I think, to answer your question about the volatility and the concerns around that, I don't think anybody should be buying Bitcoin to sell it tomorrow or next week.
Correct.
Unless you actually understand financial markets and you actually are trading. I think as a treasury management tool, you have to be willing to stomach that short-term volatility. I mean, to be honest with you, in the same way when you're holding Aussie dollars on your balance sheet, that's devalued a lot recently as well. Like Aussie dollars down a lot. I think whenever you hold any currency, any asset, in fact, you do take treasury risk. Now, most companies actually don't appropriately fully hedge their balance sheets. A lot of companies do manage a lot of cross-current foreign exchange risk. They manage asset risk. If you're a commodity, there are significant requirements to manage treasury across all sorts of businesses. Now, our view is that Bitcoin as a treasury solution, an alternative treasury solution, is very compelling, and we're trying to provide that solution as a standalone, but then provide products and services to help manage that volatility as well.
So in simplifying sort of MHC Digital, you're the railway track to getting access to crypto for your treasury, but you built that digital infrastructure to facilitate it. Now, in how you're thinking about the growth of your own business, you talked about 5 years. What I mentioned about sort of more listed companies doing it. Do you see that as a natural sort of domino effect that once sort of sovereign or countries, nations start holding crypto as a strategic asset, then listed companies are already doing it with 74 companies already. Do you expect private companies will also start to do this as well?
I think everyone will.
Yeah.
I think it's overwhelming. So, I mean, to go back to the regulatory point, that green light could facilitate a wave of adoption, which we've never seen before. And remember as well, like that's just Bitcoin.
Yes,
there's a huge range of additional kind of more technology-based things which should lend itself well to the digital asset sector. But I think, like, if you look, speaking specifically about Bitcoin, the answer is overwhelmingly yes. Like there is going to be, our view is overwhelmingly that the kind of green light to get in means that everybody's going to want to follow.
Well, I was going to finish on notes. Say congratulations to you and your team to have that sort of foresight 3 years ago. I know Michael Saylor led it sort of doing it 5 years ago, but now as soon as I heard about your model, I was like, that is a business that is at the right time, at the right place, and is the actual perfect solution for family offices, corporations, or investment groups that are looking to get sort of Bitcoin on their balance sheet and don't exactly know the process. So congrats to you and your team on building that railway to do it.
Thank you very much. The journey's just really getting started, so we're very excited for what's to come. Thank you.
Brilliant. Thank you.